What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday, and we are in one of the largest rallies we've ever seen, with all the major FAANG stocks starting to participate. We'll talk about, can the rally continue? Can these stocks continue to go higher and higher? And obviously, we'll recap all the news of this week. Better kick things off like we always do with Meta Platforms. Start the week at 268, up 1.5 to finish the week at 272. During the first half of this year, Meta stock up just 120%. The House Committee is starting to probe FTC Chair Lina Khan, as we've had a lot of turmoil in the FTC over the past year. Commissioner Wilson resigned over her, quote, deep concerns that the commission under Lina Khan is abusing power and disregarding the, quote, rule of law. The committee under the watch of the Biden administration has been relatively heavy-handed when it comes to virtually any type of merger or acquisition over the past year from multi-billion-dollar companies, not just from the tech industry. And we'll see if a House committee probe will do anything to slow down the FTC from regulating even harder. Meta announced a new Quest 3 headset starting at just $500. This virtual and mixed reality headset is slimmer than the original version, but also has higher resolution. Meta also lowering the price of their Quest 2 headset to just $299, as we anticipate potentially a device being announced just a couple of days from now at the Worldwide Developer Conference by Apple. Now, Meta is testing limiting news in Canada in response to a proposed law there that says that Meta must share revenue and negotiate deals with Canadian publishers for their news stories. We're also seeing a similar push out here in the great state of California for the, quote, California Journalism Preservation Act, saying that Meta must pay a journalism usage fee to publishers that would earn money from online ads that the company runs along its platform. And the publishers must spend at least 70% of the fee revenue on their newsroom. Meta is responding by saying, we're just going to pull the news all together. This is a great example of how regulation is probably going to put the, quote, mainstream news media in further financial troubles, as you've seen numerous bankruptcies and closings, whether it's Vice Media or BuzzFeed or certainly CNN, all having their own financial troubles over the last year. This is another example of how regulation is likely not going to help the situation. Moving on to Apple, started the week at 178, up 1.28% to finish the week very close to $181 per share, nearly all-time highs. Now, over the last 6 months, the world's most valuable company is up over 22%. Now, some Apple savings account holders are hitting snags as they try to withdraw the funds. Now, if you are like me, Apple is offering a savings account with over a 4% saving interest rate. This is all done on the phone via their wallet app. Now, I have only deposited money into this savings account, and so I have not experienced any of these withdrawals, but some customers saying they tried to transfer maybe roughly $1,700, and it took nearly 2 weeks for the funds to show up in their bank accounts. My guess is Apple and their partner Goldman Sachs will work that out. Apple says developers generated just $1.1 trillion in the App Store ecosystem in 2022. I don't think this comes as a surprise. I think some of the notable thing was that you had a 45% growth in ride-hailing apps, and travel in general had a very strong year on Apple. We'll see if that trend is able to continue or if we've seen a peak in that business. Moving on to Amazon, started the week at 122, up 1.6% to finish the week close to $124 per share. Over the last 6 months, Amazon shares up over 32%. Now, the company apparently maybe is mulling offering a phone service to its Prime customers, maybe potentially for as low as $10 per month, or potentially even free for its Prime members. Now, when asked for comment, an Amazon spokesperson says they, quote, don't have plans to add wireless at this time. T-Mobile also chimed in and says they are not in discussions about inclusions of our wireless plans inside of Amazon's Prime. Obviously, Amazon doesn't own any of the spectrum. They would buy it wholesale from either a T-Mobile, a Verizon, or maybe even AT&T, maybe even potentially Dish Network as well. And like Cricket and many of the other kind of, quote, discount wireless services, they would offer it to their customers. Amazon and other carriers were quick to shoot down this rumor, which makes me seem to believe there's probably something there. Now, iRobot gains amid a report of certifying compliance with the FTC on their Amazon deal. Another example of how the FTC, I think, is being a little heavy-handed when it comes to regulation. Sure, some of these deals, some acquisitions do deserve scrutiny and probably even do deserve to not be passed through, but we are talking about a just $1.7 billion deal for a vacuum maker. Now, this will be, I think, somewhat tangible to Amazon, which not from the revenue side, but potentially from the earnings side, as iRobot was marginally profitable, usually losing a little bit of money. But the reason they lost a lot of money is, number one, advertising, and number two, commission fees that they paid to largely Amazon. So Amazon's going to be able to slash those. They're also going to slash the kind of logistics and shipping fees as well. And so Amazon's probably going to turn a business that was just marginally profitable into something that actually makes the company just a little bit of money. Now, Amazon is settling a kids' privacy case with the FTC and the DOJ for $25 million. This relates to privacy concerns around the Alexa voice assistant. And yeah, there's no way I would ever have one of those in my house. Now, Amazon agreed to settle FTC claims also with a Ring doorbell case as it, quote, spied on users. This was a $5.8 million settlement. So the FTC getting a couple bucks from Amazon this week. Moving on to Netflix, start the week at $3.95, up 1.2% to finish the week right at $400 per share. Over the last 6 months, Netflix shares up 25%. Netflix stockholders reject a compensation package for the CEO and leadership of the company. Shareholders vetoed a $40 million salary for the CEO and another $34.6 million in compensation for the co-CEO that they have on board. Now, this is a non-binding vote, which means that the board of directors can not pay attention to it, which they've done in the past. Moving on to NVIDIA. This stock started the week at $409, and maybe I got to clean my glasses because I haven't seen this in a while. Stock actually finished the week down about 3.9% to finish the week at $393 per share. But don't worry, over the last 6 months, shares of NVIDIA up just 133%. Now, the chief executive, Jensen Huang, feels safe with regards to buying Taiwan-made chips for its GPUs. I tell you what, I don't think he really has a whole other choice. He's on the leading edge, the bleeding edge, if you will, in terms of a lot of their products. And there really is only one manufacturer that can make those at scale. And so he better be comfortable buying those from Taiwan. Now, Intel gained amid a forecast of their second quarter revenue coming in towards the second or the upper end of their second quarter guidance. We also got confirmation from the CEO of NVIDIA that some of Intel's upcoming products, which are embedded in some NVIDIA devices, actually, quote, look pretty good. Intel, obviously a stock that I've beaten down over the past several years here on the channel. The story has more or less played out. When I start my new position on Monday, maybe we have a change of tune. We'll see. NVIDIA introduced the GGX GH200 AI supercomputer. These are expected to go on sale or operational by the end of 2023 as they just continue to layer on more memory and more capabilities on these super and ultra expensive machines. Now, the company is going to build a supercomputer in the country of Israel, and it launches a networking platform based on Ethernet, which should open up some more opportunities to get these AI servers up and running. Moving on to Google, start of the week at 124, up just fractionally to finish the week basically at 124. Over the last 6 months, Google shares up 24%. The company is investing in a text-to-video AI company called Runway. It's a $100 million investment valuing the company at about $1.5 billion. I think what's interesting about all of these investments that we are seeing in particular, it used to be that Google and Microsoft and all these companies basically just provided an equity stake and got a small piece of the company. Now what they're doing is they're actually locking in cloud contracts, which I think maybe even make these deals even sweeter for the mega cap companies, as Runway is now expected to rent cloud servers from Google. Moving on to Microsoft, start of the week at 335. Basically ended the week flat at 335, but year to date, Microsoft shares up a healthy 31%. The company also in the investment stage as they back CoreWeave for its AI processing power. A lot of these companies will likely crop up as the expense to spin up one of these AI servers is absolutely immense. And that's one of the reasons why the mega cap stocks have been rallying, is because if AI is as big as it maybe appears to be, well, there's only a certain amount of companies that can spend hundreds of millions, maybe even into the billions of dollars when it comes to CapEx in investing in the cloud infrastructure. To essentially get usage of one of these AI supercomputers, you're looking at $2.23 per hour, which is drastically higher than maybe a server that runs just a plain old website. And this is where it starts at. If you are trying to train these language models, it costs exponentially more than that, not only from just the server cost and the chips. You've got to have energy powering this thing. And then I saw a report the other day that each query that you type into ChatGPT could cost the company 36 cents. So every time you press enter and ask the chatbot a question, you're looking at probably 20 to 30 cents in actual cost. We'll have a lot to talk about when it comes to that going forward. Now, Microsoft is exploring ways to close the Activision deal around the UK bloc. So the EU has approved this deal. We also got news that we got approval from South Korea. We're still waiting on the United States. I believe we've gotten approval. We're in China. Microsoft's thinking maybe they just pull out of the UK market for a period of time and maybe force the regulators based on pushback from their constituents that maybe they let the deal go through. Moving on to Tesla, start of the week at we'll call that 204. Boom, this one caught a bid, and from a technical perspective is looking very interesting. Up nearly 5% to finish the week at 213. Year to date, Tesla up nearly 10%. Elon Musk continues its tour in China as he gets back to work on the electrical vehicle maker after a hiatus, I guess you will, running Twitter. Now, ARK Invest says the quote, Tesla Cybertruck could be as mainstream as the firm's Model Y. Now, this certainly wouldn't surprise me considering how popular particularly trucks are here in North America. We are seeing globally, I believe the Model Y is the best-selling car, not just EV, but basically any platform. I don't necessarily think pickup trucks play outside of the United States as much as they do here. Also, from a pricing perspective, what I am very interested to look at is the pricing on the Cybertruck. When they announced it, it was before the pandemic, it was before supply chains, it was before you saw a rapid increase in prices. Now, Tesla has brought those back down a little bit, but when you look at the truck market here in the United States, here's your Ford F-150 Lightning. They say they start at $60,000, but you start loading these things up with options, and I think you're probably well north of $70,000. You're certainly there with their combustion engine trucks as well. You look at F-150s or Silverados, you load those things up and you're looking at like $70,000 or $80,000. Now, they still sell like hotcakes, and so will be interesting, very interesting to see this Cybertruck, how quickly they can ramp that up. Now, it's going to be priced into the stock before the results start to materialize for Tesla, but I don't necessarily think the Cybertruck being as big a hit as the Model Y is priced into the stock at the current time. Certainly, maybe the Cybertruck could potentially be a higher margin vehicle considering the competition is up close to $60,000, $70,000 for those trucks. The Cybertruck sells as well as the Model Y at those price tags. certainly could be bullish for Tesla stock. Now, speaking of bullish, moving on to the technical segment of the show, and the S&P 500 very convincingly closed above 4,200. There's been many technicians out there that have been saying, oh, it had to get above 4,200. Well, you got above it. And now the likely scenario is you continue to run up into the 43, maybe even as high as 4,400 in the coming days and weeks ahead. At that point, you should have some kind of pullback, depending on how quick it comes down, probably retesting 4,200 again, maybe just south of that. But we're not breaking any news here on the Investor Channel. The markets have been in an uptrend, and a well-defined uptrend really since the end of last year. And you have to ask yourself as an investor, if you're sitting on cash, if you're sitting on money market funds, if you're just sitting on your hands listening to all the doom and gloom content, you have to ask yourself, when are you going to get back in? I don't blame anyone that didn't get in on the October lows. Now, I posted 2 videos that were very clear here on the channel back in September, just weeks before the market opened, saying, I'm out of the bear camp. I'm back in the bull back camp. I'm accumulating stocks. In hindsight, it was the right call, but it was a risky one because we weren't back in a well-defined uptrend. But you became a well-defined uptrend back in December and January. You were in a well-defined uptrend back in March when you made a third series of higher lows, a third series of higher highs. Here we are again in the coming weeks. We are going to confirm again another series of higher highs, and on the subsequent pullback, likely another series of higher lows. At some point, you've got to be honest with yourself as an investor. These are uptrends. These are times to buy. You didn't have to be early like I was. You didn't have to jump in at the very first higher low, but at least the third higher low. If you didn't buy there, you've got to start making those plans, because you will see these technical patterns form again and again across all markets and all stocks. Moving on to Meta. No surprise here. Once we broke above 245, we were filling this gap. Whether or not we fill it, I don't know, but obviously there's a large probability. You probably got another $20 left on this one, and that is about as easy as it gets when it comes to a gap fill. Moving on to Apple, you're basically retesting highs, making new highs in this one. 2 things that could happen. You've got the Worldwide Developer Conference on Monday. I could see a scenario where they wow us again. I have not been wowed since, I think it was really like Apple Pay. I was really wowed. I remember watching the Apple presentation. This was years ago, obviously, being wowed by Apple Pay. I was like, wow, that's actually a cool product and something revolutionary. Haven't seen that from Apple in a while. I guess they could release a headset. They could release something on Monday, and you have a blow off and you have this big momentum. Tends to happen when you get to this. I mean, really 2 things can happen, and you don't tune into the channel for me to tell you the stock's either going to go up or down, but we are in decision area for Apple. You are either going to blast off the top and maybe create like an NVIDIA type moment where you just the sellers just completely dry out, or the sellers materialize and you look for pullbacks probably at 160, lower at 150, maybe even lower than that at 140 if things start to deteriorate. Moving on to Amazon, also very much have gone parabolic. There's areas of resistance up here at 136, another area at 145. Momentum stays in this market. Amazon's going to 145. Moving on to Netflix, there's this small gap up here, which looks like it's starting to create a magnet for the stock. I could see someone putting on a trade today, buying at 400, having a stop loss at maybe just $5 to $10 lower, and you're just playing this gap fill all the way up to $500. So you risk $5 to $10 to make 100. That's probably reasonable, although from a technical perspective, higher highs eventually creates a pullback opportunity. Moving on to NVIDIA, this is about as clear as it gets. The stock is at the top of a trading range. Now, it's not the most beautiful trading range, but I was getting a ton of questions, and myself included, just wondering, where's the pullback going to happen with NVIDIA? And this upper trend line does make a lot of sense. Now, the stock is volatile, not breaking any news there. So it can trade at times well over trend or well underneath trend. Right now, we're approaching trend, and given the parabolic move that the stock has made more recently, you'd expect a rejection here, pull back. If you're not in NVIDIA or you want to lock in profit, these are the areas where you're watching very closely. Moving on to Google, we'll change this back to a daily view because, as you see, also made more of a parabolic move off this $80 to $90 level. We're stalling out here at 125, although we did the same thing at 105, and I was like, we stalling out here at 105. I think it's going to be hard to get through the 110, 110s, and no, it didn't have any problem just chopping through that in over a couple of days. The next move for Google is either retesting the highs. You're either going to retest the highs here at 150, or you're going to get rejected here and likely pull back to the 100 range, which would create buying opportunities. Microsoft also has gone parabolic, retesting highs, very similar to Apple. You're either looking for a breakout above where the sellers just completely dry up, or you get rejected at this range. You're looking to buy pullbacks. The cleanest pullback would be back to this purple line, which may or may not be drawn in here perfectly, but anywhere south of it's easy to say, right? Okay, the stock's at 335, so it's like, of course, yeah, 290 would be a great pullback area. You have to make these decisions now, because if you go and rewatch the videos that we were posting in September and October of last year on these stocks, that was exactly what we're saying. Okay, the stock charts looked more like this, and we were like, okay, on these pullbacks, it's here. On this pullback, it's here. Here. Okay, make the decision now and have the discipline to execute if and when your opportunity comes. Now, I've been saying for a couple of weeks here, Tesla isn't in the best position technically, although we did finally have a breakout on this stock. We have broken out a couple other times, and depending on where you draw this trend line in, we've either broken out or we're going to hit our head on resistance. So I wouldn't necessarily chase Tesla at this moment. The high probability for Tesla is, even if you do have a breakout at this area, sure, it could look like NVIDIA or Google or Amazon or really every single one of these stocks, and basically just go parabolic and have very little pullback areas. But considering the technical situation that we're in, it's more than likely that you put up a green candle here, and technically perfect would actually be a pull back to trend, then a resumption of the uptrend. If you look at these other stocks, that's essentially what most of them did from a technical perspective. So if Tesla makes this formation, you should actually have a buying opportunity in the coming weeks in the 180s to 190 range. A push higher, a pullback to trend, a resumption of trend would basically have this stock starting to look like Google, Amazon, Alphabet, Apple, basically all of them. We'll see if this is able to materialize. Certainly if Tesla can get back into this trend, well, the all-time highs are coming for Meta. Higher highs are coming for Apple. Amazon will push probably up to 145, if not higher. Netflix will fill this gap at 500. NVIDIA will probably just continue to go to outer space. Google will likely retest the 150 area, and Microsoft will probably blow off the top as well. Luckily for me, I can sit back and not have to worry about a darn thing anymore because I sold all of these stocks this week. It is official. I start a new job at MarketWise, which is like about an $800 million company that publishes newsletters and stock information for individual self-directed investors. Probably a lot of people like you out there. So in the coming days and weeks ahead, I actually will have a lot more content and a lot more diversity of content that I will be delivering in the form of newsletters, in the form of YouTube videos, likely in the form of a podcast as well. A lot of the information I'll be doing is actually free, and there'll obviously be opportunities to pay for some of the research as well. I look forward to sharing those details as they materialize over the next couple of days here on the channel. But again, I have to thank all of you for supporting the channel for as long as you have, since if it wasn't for the YouTube channel, I likely wouldn't have gotten this job. And so for that, I am very grateful. I will see you again next week here on the channel for the FAANG Stock Recap Show. Hopefully you guys have a safe and fun weekend. We'll be back again soon. Good luck with your investments.